So as long as people
But go ahead,
accept that I am going to be 100% wrong, I'm kind of thinking 60% chance that's just a normal crypto cycle. So Bitcoin finishes 150 to 250,000. What an asset is, and it can be the same for Bitcoin or gold or real estate or equities. It's a way of putting your savings into something that you can get them back in the future. So I'm going to give two levels. The first, the very big picture level, is the world is awash with debt. Global debt is 400% of global GDP. These are bananas numbers. So what does that mean? We talk about debt a lot. What it means really is the collateral, the assets that back the system have lots and lots of people claiming on them. So if anything goes wrong, you get a fraction of your money back. Also, we're learning that banks are now bailing in creditors. So you find that the issue in the leverage world is you actually don't think, whatever you think you own, you don't actually own. It can be taken away from you. That's the real issue we're trying to solve here at a very top level, is how do I keep that recorded ownership of what is mine and what is yours, and don't pollute them because some third party uses them for their own means. And then before you know it, nobody knows anything. But the other big change was obviously the internet. So when I got into this journey, the internet was around, but it wasn't the scale of what it is now. We're now creating these global nation states that are digital, that operate outside of the US or the UK or Europe. And they need a system of, as we get more digital, each day our lives get more digital. Digital assets now have value, moving stuff around and recording the ownership. So if we now go to this system where in the United States you buy a house and it gets stamped and go to a notary and then it get recorded in a registrar, this can be instantaneous, everywhere and nowhere, and always verifiable. So it's really the operating system for the digital age. And without it, it kind of doesn't function. It's all a bit clunky. But with this, it's instantaneous settlement, recorded ownership, and transfer of everything, which was this thing that happened to both of us really 3 years ago, which was Ethereum. It's like, what is this smart contract business? So I want people to understand that everything humans do is basically a contract. All societies are organized by contracts. Me appearing with you was a contract over email. Even how societies work, how religions work, everything, they're contracts. Some are not that important. Like meeting a friend for a drink, you can say, hey, listen, I can't make it. Nobody's going to sue you for it. It might cost you more drinks next time, but that kind of thing. But others are really important. Insurance contracts, derivative contracts, contracts for ownership of property. All of this can now be digital, so you don't have to trust a third party. So we're away from the system of money. We're now talking about verified truth, electronically verifiable truth done by code. So that means we can then get rid of middlemen all over the place. And we've all spent too much money on lawyers. We've all spent too much money on accountants. We've all spent money with notaries. All of this stuff disappears. Things like insurance companies don't need to be insurance companies anymore. They're just contracts of payments and contracts for pooling of capital. In literally anything, from a ticket to a sports event to the most complex derivative contract in the world, can actually go on this new rails. So it's much bigger than either of us first thought when we first saw it. It's like, wow, it's just about everything.
What is happening in the world that has you so confident that this will rise for everybody and mainstream, Raoul? It will mainstream.
So it's kind of at three levels. Firstly, people understand that the system is broken and they're looking for answers. Some people choose gold. Some people choose Bitcoin. People use different ways of getting around this. They can feel it. It's all around you. You can see it with populism. You can see it with just how markets react. So there's this feeling that I need to find an answer here. A lot of that is being driven by, we know there's all this debt and I'm scared of it. Okay, that's good. The other thing is, what is the answer that the central banks chose, or the governments? It was create more money. So you've got this macro backdrop of debt and this fear. So that's driving adoption. And then people are finding new use cases, like NFTs for smart contract stuff. That's creating a technology adoption like anything, like the internet was. And it happens to be the fastest adoption of any technology the world has ever seen, except AI, which has been faster. We're also finding that the central banks are debasing currency. They're making our money less valuable. So we're looking for things that are a store of value over time. That's not necessarily against goods inflation. It's against the thing that governments and central banks always do. They clip the corners off the coins until you've got no coin left. That's a way of taxing you without you knowing. And that's to pay the debts that the government has because of the aging population and all the debts out there. Those two things are driving the movement of crypto. So the crypto price is based off those two issues. The adoption of the technology, as everybody's starting to build on this new tech stack, and because it solves a lot of problems. And then it's the thing that the central banks are doing, are devaluing your currency all the time. That creates a super mega trend within this. Now, it as a space is growing on average, including the bear markets, which are brutal as we all know, it's growing at 100% a year as a space. So there are 516 million wallets as of end of last year, active wallets. If it's growing at 100%, by the end of this year, it's 1 billion. Then the end of the year after, it's 2 billion. So the numbers are vast as people are adopting it. Now, the difference here between this and the internet or the mobile phone is we were users of the internet and mobile phone, but we didn't make money out of it unless you happen to own the right shares. But nobody could own the infrastructure of the internet. Different parts were. Here, you can actually own the thing by owning a token. So we're getting to participate in something that has never happened for humanity, which is a global infrastructure being built by everybody around the world at the same time, and we can own a fraction of it. First global homogeneous investment product the world has ever seen that can operate like this. So it's the same product. Bitcoin is Bitcoin in India as it is in Nigeria, as it is in London, as it is in Hawaii. It's the same thing. Indian investors can't trade Tesla shares. Yes, they can trade gold, but they don't have access to it because you have to go to the store and buy gold jewelry, and you've lost a lot of the markup within that. But here, anybody can get a wallet because it's on the internet, and you can send money home to your mother in the Philippines from the United States instantaneously. And by just owning one of the tokens, an Ethereum token or whatever it is, you've got a share of it. So if more people adopt it, you get richer. This is like one of the greatest schemes the world has ever seen in creating mass wealth, not for Wall Street, but for retail, who got to front run all of this, and create a new system that solves the problem of what's the investment, what the central banks and governments are doing, and solves the problem of an over-indebted society. I mean, that's how big it is. The average citizen's not going to be okay unless they take action. This is why people are angry, whether you're on the left or whether you're the right. You're angry because the system is failing you. And what's happening is you're a wage slave and you can't buy a house. Or you can't invest as much of the stock market that your parents could do. You just, A, cost of living is high, but B, asset prices keep coming up. And that's because they're debasing the currency. And what debasing the currency is, it sounds like a complicated economics term, but what it basically means is they're robbing you of the power to buy assets. It's been on average 15% a year since 2008. The ability to buy assets by 15% a year. So each year you sit on a pile of cash and don't buy a house, that house is roughly going up at 15% a year. That's bananas. You sit on cash for 2 years, or you don't have any savings, it gets more and more expensive. What they're actually doing here is taxing you, but by hiding it. It's like a socialization of all of this costs. But what's so massively unfair is it disproportionately hits people who are wage earners, who don't own assets. So you and I, we have assets. And so your assets offset that maybe your wages, your income doesn't rise as much. But for the average person, they clock in, they go to work, they come home. Even if you're a dentist or a doctor or a lawyer, you're still in the same boat because your wages are not rising as fast as asset prices. So your future self gets poorer, because what an asset is, and it can be the same for Bitcoin or gold or real estate or equities, it's a way of putting your savings into something that you can get them back in the future. So it's your future consumptions, your future life is in those. But you can buy less of them, so your future life is getting poorer. So everybody's getting screwed over here, and they don't understand why. How I think of it, I think there's a 60% chance that's just a normal crypto cycle. So Bitcoin finishes 150 to 250,000, i.e. it does a few X the last all-time highs. There's a 20% chance that because of the ETF and how the economic cycle works, everyone gets overexcited about rate cuts, whatever, that we kind of front load it and it's short. But then there's another 20% chance that this actually extends further than we expect, because institutions and others come into the space and it broadens out. So I think 60% chance normal cycle, 20% super cycle, 20% actually a short cycle.
On some 18-month price targets. Let's start with Bitcoin, Ethereum, and then let's finish up with one of my favorite coins, Solana.
I'm kind of thinking Bitcoin finishes this cycle closer to 250,000. I think a lot of people are lower. I think it might be higher because of the dynamics of the ETF and other stuff. I'm pegging Ethereum between 15 and 20,000. And I'm pegging Solana between 750 and 1,000.